While everyone else is complaining about 7% interest rates, the smartest investors are busy stealing 3% mortgages from the past. You don't need a bank's permission to buy a house if you use a strategy called Subject to, where you purchase the property subject to the existing financing. This means the deed of the house moves into your name, but the seller's low-interest mortgage stays in place, and you simply take over the monthly payments. For a seller who needs to move quickly or has very little equity, this is a lifesaver that allows them to walk away without a foreclosure on their record. For you, it means skipping the high interest rates of 2026 and stepping into a loan that was locked in during the record lows of 2021. The most common fear is the due on sale clause. But experienced investors know exactly how to structure these deals to keep the banks happy and the payments flowing. By mastering creative finance, you stop being a victim of the current economy and start creating your own terms that guarantee a profit. This is how you build a massive portfolio in a higher rate environment while everyone else is sitting on the sidelines waiting for a drop that isn't coming. Visit the link in the description so we can help you understand the risks and rewards of creative financing in today's market.